Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through some live mortgage rates, and then we are going to do a deep dive into DSCR loans, our favorite loan program here at the Mortgage Calculator. So it's always a good day when we're going through DSCR loans. Give us just a minute to go live on all the different platforms. Appreciate everybody tuning in nice and early. Go ahead and drop a comment there in the chat and drop any questions you have in the chat as well. All right. Happy Friday, everyone. And it looks like we're live on all the different platforms, so we'll go ahead and get it started here. We'll take the chat off the screen for now, but go ahead and keep dropping comments there, drop any questions you have as well. Welcome, everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender specializing in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our live mortgage rates for the day, and then we do a deep dive into a different loan type. Today's loan type is going to be DSCR loans. This is our favorite type of loan at the Mortgage Calculator, our most popular loan at the Mortgage Calculator, because we specialize in non-QM loans and specialize in working with investors, and this is the best program out there for investors. So with that being said, we'll get into that here shortly, but before we do that, we'll go through the live rates. So Nick, if you're ready, let's check out what the rates are looking like this morning.
All right, finally some momentum in our favor here after a lot of not so great news. But let's pull up the pricing tool and go through it today. So as Kyle mentioned, this is our pricing tool. This is going to show us the general rates and the APR for today. It is May 3rd, just after 11 a.m. Eastern. So all of our standard programs are live here. And as I mentioned, the news has been somewhat in our favor. So this should look pretty good. What we'll do is we'll compare across the programs and compare the APR. If you'd like a full breakdown of all the itemized fees that go into the APR, please get a loan estimate from one of our team members. We have 300 plus loan officers to help you out. And what we'll do as we do every day, we'll set up a basic scenario to compare across the programs. So we'll set a loan amount of $400,000 for all the demos today. Set the LTV to 80% loan to value, 20% down payment. And we'll have the computer find the lowest rates we can offer for conforming conventional. We'll compare that to FHA, which is usually the second option for most borrowers. And then we'll go into our expanded guidelines, also known as non-QM, where we have over 5,000 additional options. We also have VA and USDA. VA is only for eligible vets and active service members. Just let us know if you're eligible, and we can quote it no problem. USDA is only for eligible properties. If you're looking in those areas, just let us know, and we can quote it up, no problem. We'll start with conforming conventional. We'll do purchase, 30-year fixed, standard loan here, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt-to-income ratio here of 40%. So let's check out the conventional options this morning. All right, and it has gone down since yesterday, which is what we love to see, right? So yesterday went down, and today went down even more. Best option, 6.875 rate, 2.5 discount points in cost, puts the final APR at 7.186. So good option for our customers that qualify conventional. But if there's any reason our customers do not qualify here, we typically want to present the next option as an FHA option. So we'll set up the same exact scenario. And this time we'll simply select FHA. Everything will be identical, even though FHA does allow more leniency on credit issues as well as a much higher debt to income ratio. We're going to keep everything identical so we can compare apples to apples here across the programs. So let's check the FHA options this morning. All right, looks like it dropped a little bit as well. 5.625 rate, 3.25 discount points in cost, but the final APR at 6.644. So good option for our customers that want to use FHA, and it's very comparable to conventional for our customers that may be eligible for both options. So definitely some good options here. And if our customer does not qualify for FHA or conventional for any reason, That's where we love to specialize. Most other banks or lenders have to deny that customer. But that's where we love to present our expanded guidelines, also known as non-QM, where we have over 5,000 alternatives here where we can help our customers out that may not otherwise qualify. So when we select non-QM, everything will stay the same, but now we get to change our income type. So full doc is what we use for conventional and FHA. That's 2 years of tax returns. So if our customer, for any reason, doesn't qualify with their tax returns, we need to use some of these alternatives here. We have asset-related programs, business bank statement programs, these investor DSCR programs we're going to talk about with Jose's deep dive here, but that's only for investment properties. Personal bank statement 12-month is the one we use for the demo here. That's the most popular. And we have RSU, stated income, VOE, 1099, P&L, all kinds of options here. The 12-month bank statement is the most popular for our self-employed borrowers. Many times it's our self-employed borrowers, when they submit their tax returns, may have write-offs and may not qualify for enough income or may not qualify at all. Either way, we'll help them out, a little more income, and just use their last 12 bank statements here to determine a debt-to-income ratio of 40% in our example, using just their cash in the bank statements. So most of our self-employed borrowers qualify for much more income this way. And let's compare the rates. So these haven't changed much. Remember, non-QM doesn't change, but next week we should see some more movement with non-QM. So these are about the same as they were the last few days. 7.25 rate, 2.3 discount points, final APR 7.656. So remember when we looked at the conventional at 7.1 something, we're always within about a half a point of conventional, and I expect these non-QM rates to adjust probably early next week to reflect what we're seeing in conventional and FHA have already adjusted the last couple days. So great options here for our customers that need to use bank statements. And if we scroll down, there's hundreds and hundreds of variations here. Please get with our team. Some of these at higher rates and costs may allow bankruptcies, foreclosures, other issues that would cause us to not qualify can be solved with these non-QM programs. So tons of options here. And for our final couple demos, we always do live pricing for investment properties. So for our investors out there, we have a ton of options. So we'll set up the same demo, 400,000 loan amount, 80% loan to value. And we're going to search for the lowest rates we can offer for conforming conventional for an investment property. And we'll compare that to our expanded guideline non-QM options. Remember, the government programs, FHA, VA, and USDA do not work for investments. So we'll start with conforming conventional. Everything's going to stay the same. All we've edited here is the occupancy to an investment property. So let's start here so we can compare to our other options. All right. Oh, they're identical today. So good example. So when we usually pull these examples up, we have been for the last few weeks seeing the portfolio option at the top because this option does use the same guidelines as Fannie and Freddie, but isn't actually sold to Fannie and Freddie, so it doesn't have the adjustments that are required. So this option has been shown up at the top, but no longer, right? We've seen the markets come down, so now we have a Fannie Mae, Freddie Mac, either or here option at the same exact price. So 7.125 rate, 3.375 discount points, final APR of 7.535. So typically, our investors out there would probably choose this option if it's identical, just for the ease of the program. But this portfolio option does often beat the pricing, so we always want to display that as well. But for our investors out there, our favorite program and our suggestion is to always check out our non-QM options. So we'll set up the same exact scenario, and this time we'll select expanded guidelines, aka non-QM, for our investment property. So the first thing we need to pick is our income type for non-QM, and the most popular type for investment properties, and our topic for today, Jose is going to go into a bunch of examples here, is our DSCR product, because it doesn't require any income or employment information from our borrower or documentation on that. We simply use the estimated rents from the appraisal to calculate a DSCR value, stands for debt service coverage ratio. If the estimated rents can cover the expenses, aka the property will cash flow, that's a ratio of 1 or higher, which is preferred. We even have options for ratios under 1, but for the demo we'll put 1.5 so we can see all the programs pop up here. And prepayment penalty is standard on a DSCR option here. So our standard programs typically use 3 years. That's what we use for our demo so we can see all the standard programs. There are some that allow no prepay. That will cost more. and limit what shows up. And there's some that do allow 5 years prepayment penalties, which does improve the rate for our customers that want to hold the property. However, 3 years is the most common. That's what we'll use here, as we do every day. So let's check the DSCR options this morning. Awesome. Back to smoking the conventional here. So 6.875 rate, 3.15 discount point to cost, final APR 7.359. So we're able to beat conventional. I'd say 100% of investors will take these DSCR options, especially when we're beating conventional. Most of our DSCR clients typically take a DSCR option, even when they're much higher than conventional. So today we're beating conventional, absolutely amazing. I would definitely suggest all our investors out there go after these DSCR programs. And Jose will show you all the cool variations we have. And if you scroll down, notice there's hundreds of options. So that's what Jose is going to get into today, where in the live example, we can't always go through the variations here, but Jose will show the different ways we can capitalize on these DSCR programs. So let me go ahead and switch my screen. And we'll get into that topic for today, which is, again, our favorite loan type, DSCR loans. Very easy qualification for our investors out there, as long as they're picking quality rental properties, right? The DSCR ratio is the rents versus the expenses, and most investors are cognizant of that, and obviously are looking at good deals already. So these are typically very easy to do for your astute investors out there. And I guess, Jose, let's get into our examples here of how we can use this in different ways that we don't get to go over in the live demo.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Besides the ease and of the transaction, right? The obvious, no job required from the borrower, no employment verification necessary. I mean, that's the obvious. But there's a lot more to the DSCR than meets the eye. And one of the biggest benefits of the DSCR is, first, we have no seasoning options, right? Options where the investor can, for example, refinance out of a fixed flip loan. They may have completed their project in 30, 45 days, right? Really quick. And they want to get out of that loan and not have to wait 6 months or 12 months to be able to use the appraised value, the true market value, instead of the purchase price plus renovations, which tends to be the case in most options when you don't when you are trying to close a loan without the needed seasoning on title. So that's a great benefit of DSCR. Another amazing benefit, one super popular now, is short-term rentals, right? The DSCR program allows properties to be operated as a short-term rental. And as a matter of fact, most of the options that I'm showing you today, and I will highlight those when I'm showing it, do actually allow the use of short-term rental comps, including AirDNA, as long as your DSCR, your debt service coverage ratio, is at least 1.5, right? So that's a really big one. Now, if you're using AirDNA for a property and it doesn't DSCR at least at 1.5, well, then they don't want to do it, and maybe you should consider what you're doing with that property. But we do have options. Like I was mentioning, short-term rental is probably the best of the components here, as well as, believe it or not, we even have DSCR options when the property's gross rental income, the monthly rent, does not cover the total housing expense. We have a low ratio option when the debt service coverage ratio is 0.75 to 0.99. That means that rent is covering anywhere from 75 to 99% of the housing expense, not making it to 100%. And we even have options when the DSCR is less than 75%, 0.75. So amazing options. Let me go ahead and share them with you today. Our first option, the unicorn, right? The 15% down DSCR option, right? Well, great news. There's more conduits coming into the market. with the 15% down option. So we're seeing pricing get more competitive with this 15% down option. We even have it now where it's for 1 to 4 units. Now, not every 15% down option is for 1 to 4 units, but they are possible. Previously, it was 1 unit only. Now here we're looking at 9.749 as our lowest cost option, almost at par. And you can buy that down all the way to 8.124%. Now, those of you that have been following the show will know that 8.124% was not an option on our 15% down DSCR loans until recently. And again, I attribute that to more competition in secondary for the 15% down loan because we have more players. Now, this one is with a 3-year prepay. And now if you add the 5-year prepay instead of the 3-year, check that out. Whereas we were at 8.124 previously with the 3-year prepay, with the 5-year prepay, it's almost a 0.375 point swing. Actually, it is a 0.375 point swing. You can buy that down all the way to 7.749 and rates starting at 9.374. Again, almost at par. So you get like about a 0.375 improvement on the rates with the extra 2 years on the prepay. And now we go more into the quote unquote standard LTV, if there's such a thing for a DSCR loan, which is a very non-standard option, right? So here now, this particular option here will also allow short-term rentals. I was mentioning the short-term rental component. Using it now, they'll let you use AirDNA if your DSCR is at least 1.5. And those of you know that being able to use AirDNA is an amazing option when purchasing a property that's not currently being used as a short-term rental, where the seller doesn't have any short-term rental revenue reports that he can provide for the last 12 months. Well, this is the way to go. And on top of that, look at the rates, right? I mean, we're even talking 7.625 with a lender credit. Now, you remember those rates that Nick was showing there for the investment property? This just blows it totally out of the water, especially since Fannie and Freddie don't really, they put additional loan level price adjustments recently to investment properties and second homes. So it's even more expensive. So here, 7.625 with a lender credit is amazing, and 6.625 is even more amazing as your lowest rate option. This is 20% down, 80% loan to value. So now we'll continue with the 5-year prepays. That's what we're doing here, and this is 25% down. So you see a little bit better rate here, right? And this is the same option that allows AirDNA as well. 7.5 has a lender credit, and 6.625 is now costing you about a half a point less. Same rate, but instead of costing you 3.025, it's 2.525 for this amazing DSCR option. I mentioned to you our low ratio DSCR. This is 0.75 to 0.99, maximum 75% LTV on this, so minimum 25% down payment, and with a 5-year prepay. Now remember, this is 0.75 to 0.99. That means that the rent is not fully covering the housing expense. It's anywhere from 75 to 99% of the housing expense. And look at those rates. I mean, we're not even covering, we're at a 75% LTV, and look at those rates, right? Pretty good stuff. 8.75 is offering a lender credit for those of you that want the minimal closing costs right there. We actually give you $300. And you can buy that down all the way to 7.125. So again, amazing considering you're not even covering the full housing expense. And then the true mind blower is a DSCR on its own is not a mind-blowing enough of a concept. The no ratio DSCR, no ratio meaning you are under 0.75, right? You could be technically zero, even though I doubt there's any property that's going to have zero, because there's always going to be some type of a rental expense. Now, these no ratio and low ratio options, if we're thinking short-term rental, you're going to have a short-term rental property, but this is for the properties where you just can't get the comps. You may not have rental comps as a long-term rent. Maybe AirDNA doesn't provide any comps. The seller doesn't have any short-term rental revenue reports, but the buyer knows he's really going to hit it out of the park with that property. They know how to manage short-term rentals. They got the great marketing plan. They tell you, Jose, I want this property. Well, this is obviously the solution. And here you are looking at our lowest cost option at 9.999 interest at a cost of 0.15, and you can buy that down all the way to 8.374. Still pretty amazing when you consider you got conventional rates for investment properties that are sitting around there, and here we're looking at a DSCR no ratio at 25% down with that kind of cost. So last two examples, let's go with some cash out. So our standard cash out here for DSCR over 1.0, this is not our low or no ratio option. So 75% LTV is our max LTV here. And we are looking at 7.625 with a little bit of a lender credit. And again, look at that option there, 6.625. And this option does allow us to use short-term rental comps as well. Now, obviously, if it's a refinance, AirDNA is not going to be possible. AirDNA is only when it is a purchase. But in this case, if the seller has the last 12 months revenue reports, you can use those or go with the long-term rent if the property qualifies. So great rate there, 6.625 at a cost of 2.9 points is our lowest rate option. And then for our last example, I wanted to show everyone that we can do the no ratio under 0.75 DSCR cash out. It does have a maximum 70% LTV when we're talking about cash out. This is the same option that had 75% LTV max if it's a purchase. Still great rates. 9.75 is almost at par, and you can buy that all the way to 7.625 for our no ratio under 0.75 DSCR cash out refi with a 5-year prepayment penalty. So please always look to the mortgage calculator for all your non-QM loans, including and especially our flagship product, the debt service coverage ratio loan.
All right, thank you, Jose. Looks like we do have a couple questions here. The first question was asking if we could price out a USDA loan, but you have access to that to be able to price that, so you can do that on your own, Jackie. There. Okay, another question here: can running a multi-unit through a rental management company pass underwriting instead of personal experience?
Oh, you'd have to read the guidelines. That typically is only going to apply when it's a 5+ unit. Like for we do have the 5 to 8 unit DSCR where they ask for either ownership or management experience of a multi-unit. Now, when you're talking 1 to 4 unit, they keep it a little bit more strict, and it's more about ownership of an investment property. But also we have options where they don't have to own an investment property. They don't even have to own a primary residence. They just have to be able to document housing expense, rental expense at least. And we have DSCR options for them.
I think what he's meaning is, can you use the income if it was being run through a rental management company? Is that
Well, ownership is ownership, right? So if you owned a rental property, you've owned a rental property. It doesn't matter who manages it, right? So I think you're talking about there is a loophole where if you haven't owned one but you've managed one, that can count towards experience. But if you've owned one, you've owned one, right? Ownership is always experience. Ownership is always ownership. So I think you might be a little confused at the difference between ownership and management designation there.
It's very important that the MLO in question here read the guidelines of whatever option he's thinking about, because we can't say across the board this is true for every DSCR loan, because we always state the guidelines are always specific to the conduit where you are submitting that loan, right? So you got to look at the fine print there when they're talking about eligible borrowers and borrower experience.
all right? I don't see any more questions then, so we'll wrap it up. And remember, we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different loan type. So we'll be back next week with some new loan topics. We appreciate everybody tuning in. Everybody have a great weekend. We'll see you Monday, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Take care, everyone.
Thanks, everybody.